welcome everybody to the Open Bar. I am your host, as always, Steve Straz, the Chief Market Strategist here at All Star Charts, and there is nothing I would rather do on this fine Tuesday morning than talk about this fast market. We are digging in. Tech stocks appear to have bottomed, failed this little top. Software ready to go. Maybe some generational buying opportunities. Some of these stocks have been haircutted 50%. Throw them in the long-term account. But let's talk about how do we trade these, really this deep corrective wave that we've had in some of these groups. I'm mostly kind of focused on trading crypto and software out of these lows. I think things like Salesforce will continue to set up, right? After getting hit so hard, you want to see some sort of little tactical base would be nice. The V's are tough to play, but we could talk about different ways to do it in different levels. If there's other stuff, on your guys' minds, we can go wherever. I think industrials are interesting. I think you want to be careful in terms of entering here for a lot of them. Transportation stocks, definitely, joining, other leadership groups here in industrial value, cyclical areas. I think financials are due for a move. XLF had a nice little pullback there. They look pretty ready. Energy probably due for a breather, but it doesn't look like it's coming. It doesn't look like it's coming. Down a little bit here today, popped and faded. So let them dance a little bit with the energy. You don't have to come in and buy the highs. Let them correct for at least a couple days, right, and set back up. Housing, I don't like, Bill. I don't like the housing. We'll throw up the charts in just a second. Let me check the chat. Is the open bar running? There's always an open bar at my house. Steve, on the morning show, this is from Bill. You stated that crypto is or has bottomed, maybe in the process of bottoming. Yeah, I think so. Miners better or BTC ETH better? Depends, Bill. Do you like the juice? How much juice do you want? Times like these, when an area gets absolutely decimated, like crypto has, options can get very expensive. You don't want to overpay. One way to trade out of these lows, we have all of these leveraged vehicles now. They don't get more expensive due to market volatility, right? Think about it. 2x long ETFs is a really good way to pick up that leverage without overpaying for options that have spiked in terms of the premiums that you're going to have to pay. Does that make sense? Something like a little MSFU off the lows to add a little juice on that Microsoft bounce. That was pretty obvious, was coming any day now since last week. A little AVGX failing this top. A little Misty U, MSTU, if you're feeling crazy. That's another way to do it. Yeah, Rachel. Good. Kev, you got to do it, Kevy. I stopped out of those puts. We talked about it, sent a note to members. Hopefully you saw it this weekend. But I sold half Friday, got out of the rest yesterday. But you got to do it. I sell first or hedge first and ask questions later. There was a moment last week. What was it? Thursday mid-morning, where I was looking at some charts, all these tops, ARC, XLK, software literally showing no signs that the bleeding was going to stop. And I'm looking around, talking to some friends on the phone saying, this bull market could be over. If small caps and industrials and financials catch lower, what's really left? Software is going to take tech. Speculative tech's already gone. You lost the crypto. No signs of risk appetite. People are out here buying the most boring stocks in the world, which is okay. Boring's good sometimes, right? But I was thinking we are on the brink of collapse, and the market will do that to you. It knows where your uncle point is, and it's going to press on it. It knows where these key levels are. It's going to shake below them right before the moment where it reverses and goes higher. And that's what's happened in the 2-3 sessions that have followed, starting Friday. Really dug in Thursday. Friday really showed some evidence of a bottom due to the upside momentum, right? Major moves, some huge moves. Follow through yesterday. And I think we're following through here today. It's safe to say I am looking at my, can we throw up the cockpit, Spencer? This is our top-down cockpit, right? We got the earnings cockpit here. We got the options cockpit. We got the rotation cockpit, right? This is where I live. And right now, if you take a look, materials down a bit, consumer defensive down a bit, industrials down a bit. Look, I'll tell you, industrials and materials, well deserved. A little corrective action here, a little backing and filling. This is what industrials look like on the daily, right? How about materials? Holy cow, right? Things have really taken off. If you want to look at the spiders, I mean, materials broke out a while ago now, right? Really coming into the year, you got this major breakout. We're already up 12, 13% from that level. XLI, I mean, off of the bear market lows in 2022, this thing's doubled, right? So don't get greedy and force bad entries in these areas. I think you want to look for that rotation. Tech probably steps up here and starts leading. I think you're going to get that big breakout in tech. Again, it's just exactly what we've been saying. Industrials, financials, the broader market looking so good, small caps breaking out. You're not going to lose technology on an absolute basis, or it's going to take the whole market with it. You won't want to be in any of that stuff either. Tech is too important. It's too big of a market, right? Big growth. So what you're seeing now is just like we talked about. We're saying, well, this has got to be a failed top. This can't be a real top here. It can't be a valid top here. So we're drawing it up like this. Tech came down, tested those November lows almost to the penny. You got the 200-day moving average, right? Coming up right beneath it. And now we're digging in. If you want to say, okay, the coast is clear, sprinkle some VWAPs in here. Sprinkle some VWAPs. Look at that. Taking them both back, right? So if we're above these two VWAPs here, there's no VWAP you could drop on this chart anywhere that we would be below. What does that tell you? Buyers are back in control across all time frames. Not only are buyers back in control of this group, we just had a pretty nasty reset. Think about what your friends are telling you about software right now. Everybody's a software expert, right? Because that's what happens. We're humans. Something happens, and then we come in and we want to explain it. So now everybody's coming in, oh, you can't buy software stocks because of this. The narrative's out there now. It's all over the newspapers, on mainstream financial media. So everybody knows, the bearish thesis around software. It's not a secret. It was being priced in all of last year. In fact, take a looky here. This is not new. So anybody who just thinks that they just found out this bearish thesis about software and that they're early, well, the market found out a long time ago. Software peaked in September of last year and was in a 30% plus drawdown just last week. Cisco looks great, Kevy. Look at this big old base in the Cisco. Let's zoom way out on this one. Again, you're probably going to hit some resistance around here. We're clearing those dot-com bubble highs, but I wouldn't be surprised for a little chop around this level. At the end of the day, this is Cisco, right? It's trading like a speculative growth stock. It's not. But yeah, they're very much a part of the AI story. Cisco's a good one. Another one that's breaking out today that I really like, part of the AI story, legacy tech, as we like to call them, Dell. Dell. We were thinking about the Dell last week. We picked another legacy tech stock that didn't work out as well. But look at this. Speaking of a failed top, it's beautiful, right? So you got the top. Looks like it's a top left shoulder, head, right shoulder. And then what's going on? Oh, it broke down, right? The bears took this one down. Or did they? Starts chopping in this little coil, and then boom, surges right back above that neckline. You got the bullish momentum divergence in place. Now you drop some VWAPs from those old highs late last year. Right there, Dell could be off to the races. The AI story kind of coming back here, right? Oracle. What they do, like a little debt offering. So now nobody worries. Now people are less worried about their money situation. Oracle digging in. That's important for the AI story. Almost 20% off the lows from just last week. NVIDIA, one green candle away from a major breakout here and be headed back to 200. Broadcom, speaking of the AI story, critically important, right? That couldn't be a top, and it wasn't. Big shake there. I got shook. It's already fired 17% off the lows. So all these stocks are coming back. The whole group's coming back, and that's incredibly bullish for the broader market because I don't think we could have lost these stocks, and then everything would be fine elsewhere. So the moment that the bulls had to step in, right, and defend some key levels here, they did. I bought a couple weekly calls in the coin, Kevy. I think some for next week too. Yeah, quick pop, one green candle, take some quick profits, let it run, see what happens. Love that. Let's flip it over and look at these big levels in crypto because I know people are interested. Coin could be at 200 in a couple days. I think the micro strategy, this thing's so overdone. If you want to get super spicy, I think the Biminer probably back towards 30 pretty soon here. You know, Robinhood probably fails this top, right? Bit of a ways to go still, but that one's on sale too. I mean, Robinhood down almost 50%. Nice, nice. So again, a good reset in the cryptos and areas of tech. Big reset. XLE probably does have a long way to run, but the time to enter XLE is past. Right? We were pounding the table. I feel like all I was talking about was energy for a couple months there. Um, I don't. It's not good for fresh entries probably here, unless you're going to go to some of the ENPs, right, that have really been lagging because these are the most leveraged to the prices of the underlying, right, crude oil itself, and crude looks like it's going for a big breakout here, right? So something like EOG, these forgotten shale or American oil names, I think are offering some really good entries. But the leaders, the ones that have already gone, don't think you're buying Exxon here and getting a good entry. The thing's been overbought for over a month now, right? The time to buy Exxon is when we were pounding the table about Exxon back here around 120 and jumping this breakout. I literally came on several shows back in December saying, I am buying Exxon calls for every expiration from now until January 2027. I've probably sold half of those calls already, right? So I think the easy money has already been made, right? That blast off momentum, you really want to be in for that moment, especially if you're trading it with leverage in the options market. So I wouldn't go chasing leaps here. You probably should have just trusted me a month or two ago. But yeah, energy is probably the place to be for a couple of years now, year or two. But you play the waves, right? Let it pull back and then find a nice entry. You don't want to buy something after it's gone parabolic here, which is what's going on with these big energy names. I haven't bought any leaps in software. I'm buying common stock in ServiceNow, Salesforce, Adobe. I own Microsoft is now my largest position since last week. Um, and Intuit is another favorite. I haven't bought any leaps. I'll let you know if I do. We will be buying leaps in beat report and some names soon. Gonna release one today. Chinese internet stock, just perfect. The chart's so perfect. We're definitely doing leaps. Yeah, if you're very long energy and you got in at the right time, start to pay yourself because you got a major move. And if you're doing it through calls, they're they've taken off, right? You're probably up 4, 5, 6, 7x in some of those calls. You should be 10x in some of them, the shorter dated ones. So you want to take those off. Maybe leave the longer dated ones. Forget utilities, dude. Forget utilities. Yeah, but all those that you're naming, VLO, MPC, PSX, they've moved. They've already gone. I bought the PSX here, right? When it was breaking out. I'm not going to buy it up here. Should have gotten 8.5% ago. So look for the fresh entries. Something like Oxy that hasn't gone yet, right? Devon recently went. Wouldn't even want to buy that up here right now. Apache looks ready to go. Fang, that's a good entry right here, right? Ooh, that is a good entry, right? So just you want to pick and choose. You don't want to buy the ones that are already extended. You want to buy the ones that are going to catch up and look like their peers that are extended soon, right? Who's Larry Williams? Isn't he the coach of Maryland, Spencer? What up, chat? Coin filled the gap. What gap? How so many gaps? Forget these gaps. Forget the gaps. Don't overthink the gaps. China looks fantastic, Harminder. China looks really, really good. Yeah. Oh yeah, housing. Here, ITB. I don't like it. I don't like it, but it probably works. Housing is sketchy right now. I think there's some headline risk here. I don't like the way that the nation's top mortgage provider, Rocket Companies, is acting. I own a lot of this in the long-term account, so I am a long-term bull in Rocket, but I think there's just some short-term supply to overcome in these markets. And with the home builders, you want to pick the right ones, right? Something like Lennar has just been so bad for so long, and then you have other ones like Toll Brothers that are set up and look really good here, right? So go with the leaders, go with the strong names if you're going to do home builders. But I think we might be in for some more volatility with the homies. Depends on how you want to do it, right? Depends on how you want to do it. Is healthcare dead? No, healthcare looks fine. It's just boring. All right, we'll talk about it. We're going to talk about the cryptos. I see your question, Jake Dennis. What's the huge call, Nat? Yeah, loaded up in the now. Nice. Everybody's afraid of software. Everybody's like buying into this narrative, not using their own brains, just repeating what they read in the Wall Street Journal. Yeah, go buy the software for sure. Give it time, buy the common stock, right? I know who Larry Williams is, guys. Being sarcastic. All right, let's flip it. Trading view. So, how do we know? Oh, look, I got the Carnival Cruise Line up. Carnival Cruise Line. What do you know? 30 bucks, monster base breakout there. Beautiful. Really nice. And just in general, some of these travel stocks. Look at United Airlines. What did Warren Buffett say about the airlines? Look at Delta. Wow. Really good. These are new all-time highs, by the way, in the airlines. How about Royal Caribbean Cruise Lines? Hey now, look at that. How about Norwegian? Coiled up, back above VWAP, right? This is a monster base here, called a long-term coil. I don't like to draw triangles this big, but you know, there are no real rules in pattern analysis. Patterns are fractal. So that's a monster triangle, monster base. Poof, Norwegian breaks out. It's got 60 written all over it. And then I always like the crummier ones for some catch-up trades. Let's flip this thing around. Oh, look at that. American Airlines. Say what you want about American Airlines, but probably looks more and more like United and Delta soon, right? A lot to do here. And if you look at some of the other crummy airlines, Southwest looked like American not long ago. JetBlue, beautiful. Great, right? Great job. Great job, SM Traz. I locked in to the XOM 120 Jan 2027 calls. You could have gone a little out of the money there. You could have gone 130, 140. But great. Good, really nice. I love to hear that. I know that I was pounding the table about buying Exxon specifically, but also just energy in general, doing it with leaps, going out, buying time. Could also do the short-term trades. We did those too, right? But just sprinkle some loving. When you nail a breakout like the one we got in Exxon, right, which to me was clear as day, the Straz indicator never looked so good. Here it is on a monthly. Oop, don't want that one. I want this one and this one, right? So we were talking about it back here in October, November, when we were getting these crossover signals, and that's why. Because look at this monster breakout here, right? You had a big level there, another level there. It was very clear where this thing was headed, in my opinion, right? So we loaded up right into here in this coil. And leaps definitely, but we knew like major volatility expansions coming. Now it's already underway. If you just zoom in, look at it weekly. I mean, we're getting very extended here. Throw up the RSI. Oops. Throw up the RSI. Overbought on the weekly. Very overbought and been overbought on the daily. And you're overbought on the monthly now too. right? So I don't like it for new money, but I love it if you're already in it. Great job. They all went to Epstein Island, Robert, as it turns out. Not surprised to hear that. Yeah. Oh well. 10 bagger loading, love it. Yeah, it's too much for me. It's too much for me. Okay. Regarding Rocket, yeah, good question. What's the best entry level on the Rocket? And yeah, I think growth has bottomed out. The growth ratios have bottomed out. We'll show that. For Rocket, real quick, before we go to the growth. Look, you're right there. And you got the 38%. Love to see that. We're back above VWAPs, right? Big trend reversals in. But I want to clear this overhead resistance. So I don't feel really too good about Rocket moving higher in the short and intermediate term until we're back above like 22, 23 bucks. All right. Another way to do it, right? Because we're above the VWAP from the prior cycle. See? Well, and it's acting as support now, which you love to see, right? Um, but another way to see, like, okay, when is the coast clear for the Rocket over the short term? It's just VWAP from this cycle high here. Oops. So right there. We blow through this, right? Big green candle today or tomorrow. Look, gun to my head, I don't think we really stick this quite yet. I think you get a little more chop here, right? And then eventually go. But that's the level you would want to use, right? If you really want to get in here, you're jonesing for an entry in the Rocket, use that VWAP right there from the cycle high, right? So you're right there. Don't be surprised if it takes a couple weeks though. I think some chop in this area makes sense for the Rocket. Okay, let's look at some of these ratio charts because it's a great question. Has the Nasdaq bottomed relative to the broader market? This is tech, big cap tech, relative to the S&P 500. It's going to be very similar to a Nasdaq broader market ratio. You got a big level here, right? The November sell-off was bad. In December, we retested this level again, but the recent sell-off on a relative basis far worse, right? Because the broader market was so strong. We're back above this little neckline here and failing this top. Yeah, I think it's go time. And the group that you're going to want to be in more than anything is tech. Just as soon as everybody's souring on tech, right? Oh, everybody's like, oh, international stocks. That's not new. It's been going on for 2 years. Oh, value's outperforming. Also not new, right? So a little mean reversion in those relative trends makes a lot of sense. XLK SPY, if it's back above these pivot lows, I think it's go time. Also, this is exhaustion here. So this is just a short-term rate of change, right? Let's look at like a 5-day. Yes, this is a 5-day rate of change on the XLK SPY. When has it been this bad? Down 6% on a rolling 5-day basis. Far worse than back in 24. Far worse than at any time cycle was bottoming. You would have to go all the way back to off of the financial crisis lows in May of 2009 for a 5-day period where tech underperformed more than they just did. So at the very least, I think you get a dead cat bounce and mean reversion in the opposite direction. These are still the greatest stocks in the world. There are always buyers for them. These are the things people want to own. Money managers want to own more than anything, right? So I think this sentiment reset, that's this technical reset, you combine those things, you look at the fundamentals, also tech stocks for the first time, and I can't remember how long, are cheaper than industrials on a next 12-month price to earnings basis. Some of these software stocks are trading at like low double-digit multiples. Never seen 15 times for Salesforce, almost 10 times for Adobe. Microsoft, cheap as it's been my whole career too. I think you got to buy them. And again, it's what's your time frame. I'm not even talking about playing the bounce here. I think you could have probably already wanted to make that move, but like just throw them in the long-term account. This company is going to be just fine. There's been zero fundamental deterioration in these big software names. You could just buy them for half the price that you could have bought them at 5 or 6 months ago. Sign me up for that. I'm not overthinking this. I'm not thinking too hard about it. I'm sure that AI will eat some software businesses. Totally. But not Microsoft, not Salesforce. You're not even seeing it. I think it's crazy talk. All right. Let's do the cryptos and let's get out of here, right? Right? We're thinking about throwing on the APLD today. We just had a meeting. We were looking through the levels, talking to you, Todd, about the Wolf. APLD looks so set up. Cipher, we want to be sure that these things are really going, but Cipher, Wolf, IREN, APLD, these are the big data center stocks formerly known as Bitcoin miners. Just look fantastic. So good for you, Todd. Really nice breakout on the Wolf. Coiled up. Love to see it. Cipher's probably my favorite. Cipher's probably my favorite, to be honest. So yeah, we're watching them closely. Watch your email, watch your inbox. You'll probably get something today. I just told you specifically what I'm looking at in software. Also, just to finish that conversation, I'm looking at this. Any way you want to look at the rate of change, look at that blowing out. Holy cow. Any way you want to look at the rate of change here, this is the 5-day. I have to go all the way back to the beginning of time. This is software relative to the broader market. Also a monster level here at 13, right? If you want to play it against there with the ratio chart, that makes a lot of sense to me. But basically, this is exhaustion. That's trend exhaustion, right? That's the kind of reading where things end. You do a weekly. This is a 5-week. I like the 4-week because it's 1 month. The sell-off now far worse than even what we saw coming out of the dot-com bubble, right? When the market crashed in 01 into 02. They are selling software stocks out here today harder than they were back then at the dot-com bust. So when I say generational buying opportunity, I'm thinking of this chart and some others, along with the way these companies have been re-rated so aggressively to the downside. Look at it on 1 week. Any way you want to look at it. They've never sold software stocks so hard. Right? So if you are a believer that this narrative is a little bit overblown here, I think you step in, you buy the good ones, and call it a day. Now, the cryptos. All right. Are we bouncing? Are there trading opportunities here in the very, very short term? I think so. Now, what is the level that invalidates that tradable low bullish thesis? Let's zoom in. 1 hour chart of Ethereum right here. VWAP anchored at the lows from last Thursday. Let's drill in a little bit more. I want to see this more. 30-minute, boom, right? That's the level. That's the level. We got a hook higher here in ETH. Got to be back above what, 2020? 2020 in the ETH. That's really the level you could do this too. If you want confirmation, boom, right? Because that's a nice little head and shoulders there, right? So if this breaks and goes, this little zone here, 2000 to 2020, yeah, we're talking retest. Now, if it holds, where does ETH go from there? You could just measure it out, right? 1750 up to the top of the range, called 2100. You tack on, I don't know, 350, 400 points now from the neckline. 2400 would measure that move out, right? So you do it like this, right? Watch. Boom. That's the move. The automatic reaction, measure that out, get you around 2400, right? Boom. And guess what? It's not just Ethereum. They all look the same way. Here's Bitcoin with that VWAP anchored to that low from last Thursday. You want to draw a slanted neckline, go for it. I would probably draw it horizontally, right? But you could see the market keeps reacting here. Okay, Bitcoin for now, here this morning, digging in at this key level again. We saw it yesterday, tested this level, dug in. Now back here again today, testing this level, digging in. We saw it test this level back on Saturday as well. How about Solana? They can't all look the same, can they? Yes, they do. Here's Solana. Draw it the same way. Right? We got to hold these lows here. These little pivot lows. Tested it yesterday, dug in, bounced off of this level. Back here this morning, probably digs in, bounces off this level. You can measure it out in the same way. Probably put you back above 100 soon. What about Ripple? Do they all look this way? Do they all just respect the VWAP? It's crazy, right? Boom, right there. Ripple shook below it yesterday, bounced back to the highs from Sunday, back at it today, probably going to bounce higher, right? So that's what's going on with crypto right now. Drop those VWAPs from the lows from last Thursday. If we're above it, yeah, I think you go buy the APLDs, buy the Wolves, buy the Irens, buy the Ciphers. Probably even get really spicy, buy a Mara or a Riot or a Clean Spark. Those will probably dig in and rip here too. I'm doing it through Coinbase calls, Coinbase Leverage Fund. Also buying more Coinbase for the long-term account. I have a huge position in MicroStrategy right now. Another big position in the Biminer. Those are really my trading vehicles. We're doing some of these data centers. Trust me. I'm in the IREN. I'm in the Cypher too. I think that those pop probably less reliant on the prices of Bitcoin as some of these other crypto stocks. Right. So if you really want to be levered perfectly to a bounce in the spot markets for crypto, I think you do coin, MSTR for Bitcoin, Biminer for ETH. Coin will give you like more of a Solana feel. Probably correlates to Solana better, even closer than the big two. Right, but there's different vehicles. TTD, I was in and got stopped out of SM Traz. I tried to buy that, thinking it was a failed top, like last week or the week before, and the market was like, "You are wrong, sir." In like one day, TTD just got blasted. Here, I'll show you what I did. Yeah, I came in right here. I'm like, this is going to be okay. I'll start accumulating this here. It was a couple weeks ago now. So I came into the TTD. I'm like, yeah, I'm going to get it right here. I got in right here thinking it's going to scoop. I probably got faked out on this candle right here, right? These are weeklies. Probably got in right there about a month ago. And then it was like boom, boom, boom. So I got stopped out very quickly. Listen to the market when it talks to you, you know? And then there's other stuff like here's the Salesforce, which is slowly becoming my favorite. And already below that VWAP. Right? But what if you zoom out a bit here? Boom! Look at that 2016 bear market. Salesforce right at that VWAP. So find the level that makes sense, right? And define your risk in a way that in the event that you are wrong, you don't lose too much. If your levels get blown, even if it's a long-term position, you get out and then get back in, right? Adobe. Could we have a cleaner level here? And next week, I swear, I'm done talking about software for a while because I know we've been talking about it. But I feel really strongly about this here. Adobe, right there. What is it? 274, 275, bang. Above there on strength, love it. Intuit, totally just getting busted up out here. What if we VWAP it from the COVID lows? That's probably a little too far away. Right, but there's different ways that you could do this is the idea here. ServiceNow, let's just touch on real quick too. Remember when ServiceNow and all these software stocks broke out of these bases back in 22, 23? Look at them now, doing a round trip, right? ServiceNow has been such a good stock for so long. You have this little cluster here coming out of the base breakout level. I'd say this is probably a pretty good place to define your risk, right? Because this was, boom, that was the trend reversal level, right? Now we're back there. Could lean right into it. Boom. Beautiful. All right. So that's really it. Yeah, TTD, Widowmaker. Whew. Another one I got stopped out of quickly was the Roper, ROP. Buying this coil right here. And then boom, boom, boom. So just listen to the market, right? When this kind of selling happens, I probably avoided here, stopping myself out of something like this. Probably avoided, I don't know, probably stopped out right here at the end of December. Save myself another 20% loss, right? So if you come in and you pick a level, right? Like in the case of Roper, it was very clear, getting in where I did, betting on that holding, right? Basically playing this continuation pattern, betting on it to fail, right? And not continue lower, but to fail and resolve higher. So as soon as it showed that this was going to be a valid continuation pattern, right? And it was completing to the downside, you get out, right? And if Roper dug in the next day and shot higher, you could buy it back, right? Avago, this bastard shook me out right here at the lows Wednesday. And look at what it did since. Guess what we did? We bought it right back. Breakout multiplier members know. It's what you do, right? But you make the decisions and you act in a way at any given day. And when that selling pressure and that volatility picks up and things are looking really dicey, you sell first, you ask questions later, right? We are trading to live another day in those environments, in those volatile times. So I'm happy to get out and get back in. If you do this kind of stuff in the retirement account, you don't even have to think about taxes. Right? So there are ways to do that, in a smart way. But man, the selling pressure, the way things were looking last week, just move to the side, reassess, see what tomorrow brings. Nothing ever wrong with that. Definitely suffered from some slippage from selling a lot of stuff last week that I'm now buying back slightly higher. That's okay. Because the other scenario, the bearish scenario, if it played out, I would have lost a hell of a lot more money if I hung on to all those positions. Right? So you're always weighing the possibilities, weighing the different outcomes that could materialize in the future, right? And then just trying to do the thing that helps you and your account survive for when those bad times pass. That's it. All right, everybody. Thank you, as always, for joining me here on the open bar. We're going to get this audio situation figured out. Hopefully, you can't hear the static that I can. I think I need some new speakers. Maybe I was playing my music too loud. I don't know. But I do need some tech support today. We're going to figure this out. We'll be back tomorrow on the morning show and all of our other, regularly programmed shows this week. So thank you all, as always, for joining me here on the open bar. We will see you next week, same time, same place, Tuesday at 10 o'clock. Adios. We're in the VNet.